Hello, everyone. This is the Free American Press with your host, Alexander Horat. Today, we're going to be having the Economic Ninja on the show. But before we get into it, if you could please subscribe to my channel and leave a like on the video, that would be really appreciated. Hello, thank you for being on the show.
How are you doing?
Oh, I'm doing pretty good. How are you?
I'm doing awesome. It's a beautiful sunny day. Hopefully I don't sweat too much. It's getting warm.
Oh, yeah, it's like 110 where I'm at, so it's definitely a big heat wave. So, I wanted to talk to you a little bit about this Wells Fargo shuttering down all its personal lines of credit. So I'll share my screen for this article so people can see it, and I wanted to see your thoughts on it and what you think of this.
So yeah, so I did the story. It broke on Zero Hedge, and I knew exactly what we were looking at. Wells Fargo shut down all of its personal lines of credit. Now, first, I need to actually explain, I guess, what a personal line of credit is, because we had sort of a freak out on YouTube. People were like saying, I have a Wells Fargo bank account, or I have a Wells Fargo home equity line. How's that going to affect it? A personal line of credit is exactly what it says. You go into a bank and you put up your personal information as collateral, and you're not putting up real assets. You're not putting like your house on the line, your car on the line. You're literally putting your name and social security number on the line. And so what that is it has a certain type of obligations with it. So what they did, and these are very widely used, it's a big loan product, is they are cutting those off in a couple of weeks. Now, where I believe it's so important is because we saw this exact same scenario play out in 2007, 2008 with home equity lines of credit. And so this is just one more nail in the coffin of the facts that the banks are slowing down drastically the amount of money that they want to put into the market, because they do not feel that the average American can pay it back.
So do you think we could see a run on the banks?
Absolutely not. This is actually a couple different things. This is their way of protecting them from that, and they have many different ways of protecting themselves from that. What I believe you're going to see is people are not. They're going to have these equity lines are out, these personal lines of credit out, and they're not going to get the notices until they're too late, and then they'll just be frozen. I actually know multiple people in 2007, 2008 that had HELOCs, the home equity lines of credit, and they just literally got a letter in the mail saying your equity line has been frozen, whether you have borrowed half of it, all of it, or even none of it, right? Your equity line is now frozen, and we are no longer going to service this. So if you owe on it, you're going to keep paying your payments. Nothing's changed. But if you haven't been using it, you're not able to access it anymore.
Okay, so do you think other banks are going to follow Wells Fargo suit? Do you think they're going to do the same thing?
I do, actually. So you have to remember, a lot of people like to put size of banks along with the importance of their statements or their actions. And Wells Fargo is a very large bank. Okay. I've heard people say, well, they're not the big six. I'm like, well, I don't care if they're not the big six. They're massive. The facts are Wells Fargo was the largest auto lender years ago, and it is now not, because it drastically pulled those loans too off the table. So other banks are watching this. I guarantee you there's banks right now talking about should they be doing this as well. However, it's funny because this action was a blatant in your face, we're pulling this product off the table. Whereas right now, other banks are doing stealth moves behind the scenes, and what they're simply doing is they are changing the way they do loans. And I'll give you an example. Chase, JP Morgan came out about, I want to say almost a year ago, and they said, we are going to stop doing mortgages unless people have 20% down. Now, I don't know if they fully finalized that, because I don't have a mortgage with Chase, but that is an example of now demanding higher, they want more out of their borrowers. So what they're doing is slowly, stealthily, secretly slowing the amount of loans that they make, by requiring more things from the borrowers.
Okay, so do you think the United States will start heading into a deflationary cycle? Because, America's basically run off credit. A lot of people have credit cards and everything else. So do you think money will get tight?
I do. So what I believe is going to happen is banks are smart. They know that what we're moving into right now, that we're topping in this bubble, and they want to start ratcheting back how much they spend. It's not only to protect themselves, but actually they're going to put the Federal Reserve into a position where they force the Fed into making a decision. Either, hey, lower the rates even more so we can, increase our margins and make even more profits, or we're just not going to lend in the system. So the facts are whenever credit tightens, we see deflation. Now, the facts are a lot of people like to put a time frame, like in their mind, like, well, this happens, that means tomorrow we should see an outcome. That's not how it always rolls out. These decisions that are being made by banks right now are going to take weeks, if not months, for us to see it on Wall Street. Okay. These to me are sort of lagging indicators. So yes, every time we see a credit retraction, we will turn into deflation, quite simply because there's less money, period, out in the system.
Okay, so how will this affect the home prices across the United States?
So we have a very interesting dynamic. Back in 2004, 2005, we did not have institutions buying up homes. And I think this is quite dangerous, to be honest with you, because the one institution that I'm really looking at right now, I know a lot of people are talking about BlackRock, it's Zillow. And what I think is really scary about the Zillow story is, and I'm going to get to the home prices, is that Zillow is able to price these homes. They have built what most people trust as a trustworthy mechanism for pricing homes, as it's called a Zestimate. And that's what's scary, because right now, even if there's easy money leaving the system as far as personal lines of credit going into the American public to speculate, these institutions are able to still get easy money through the Fed directly. So I don't see that changing anytime soon, until there is a point where these institutions start saying, because they're buying homes to either flip or rent, if all of a sudden the general public starts losing their jobs, or we start seeing that the prices are getting so crazy, which they're already crazy, but rents are so high to where people are going, I can't pay rent, and we start seeing changes in the unemployment rates, which I believe we're going to see in the next 4 weeks, that are going to really shock the system. That's when all of a sudden the institutions go, whoa. Yeah, we're printing money for free, but there's a point at which we have diminishing returns because we're not getting as much bang for our buck in rental income or yields as we once were. So that's when they start to slow down their purchases.
Okay, so we could be seeing some, price reductions in the housing market then.
Yeah, it's going to be interesting. I think it's going to be definitely regional, because right now, there's large companies that are buying up the best of the best. They're buying up all the waterfront. They're buying up all the oceanfront. They're buying up the incredible locales. Where I think you're going to see a massive, drastic change is when they stop buying apartment complexes in suburban areas and in the Midwest and usually typically slower real estate markets. That's when you're going to start to see, I think, really regional declines in real estate. But for the short term, I think we're going to see the hot locations like California, Florida, things like that really keep booming.
Okay, so basically, in the whole scheme of things, you're thinking, real estate will continue to go up for the most part, right?
In the short term, because of literally crazy money printing, we're seeing something that's unfounded. But I keep telling people that I'm expecting an event pretty soon. I really believe that if we don't see, I believe we're due for a very real, solid stock market correction, possibly a bond market shakeup within the next 12 months. And it's not financial advice, but when that happens, it will send ripples through the equity markets. And what will happen is that credit will, I believe, seize up as fast as it did in 2008, which will cause a decline in homes.
Right. So one thing I was looking at, it seems like cryptocurrencies, if we get into that a little bit, it seems like they do really good, with inflation. It seems like, especially the last few years, they've been going up really high. So do you think as credit dries up, people can't get credit? A lot of people seems to buy crypto with credit. Do you think we could see the crypto market have a crash or go down because of people not being able to get credit anymore?
I do. So yes, so first off, there's a ton of leverage in the system, which is really scary. It's scary. I feel bad for the younger generations that are are literally gambling possibly their life away, their life savings away on apps like Robinhood, where you can literally just start an app and you can actually borrow on margin. It's scary. Most young people don't even know what a margin call is, let alone how volatile the crypto markets are. Well, with crypto, we're seeing lots of leverage because we have asset management companies like MicroStrategy that are going out and raising massive amounts of funds and buying Bitcoin, usually over the OTC markets, so the over the counter, so it doesn't affect the price. And then they're storing them, which is good long term because the smaller the float, the more valuable whatever the asset is, right? But we are also seeing massive leverage. And yes, I believe there are a lot of people with these credit lines that just got canceled that are using that money right now to leverage cryptocurrencies. We saw this during the 1920s, during the Roaring 20s, where after the depression of 1920, which most people don't even understand, that came about from a flu, right? Epidemic. This easy money policy came in, and for 10 years, people speculated like crazy, and then they lost everything. And I'm going to be honest with you, I don't think that this period of speculation is going to last 10 years like it did in the 20s. So yes, I do believe when the equity markets crash, we'll see a crash in crypto because of how attached it is to Wall Street right now. With that being said, I still believe that crypto is still in a long-term bull market, and I think it'll be a pretty quick, almost like a flash crash. It'll last, not again financial advice, but in my opinion, seeing as long as I've been in cryptos, a few weeks to a couple months downturn, and then it'll start rocketing because the big boys will start realizing what just happened to the dollar.
Yeah. So do you think, these banks, they're gonna, when everything crashes, like crypto and real estate, do you think they're just gonna be, once it's down to like pennies on the dollar, do you think they're just gonna be buying it all up, real estate and, cryptos and stuff like that?
Yeah, 100%. There's a verse in the Bible. It says that the meek will inherit the earth. And I love that verse because it's so true. Most people don't understand what the term meek means. And I want to explain that because right now the banks are being meek. Meek means that you have all power and authority or all the money to be able to do whatever you want, but you choose not to do it, right? Because wisdom kicks in, you go, this isn't the time to flex my muscle, right? And right now, the banks, they have a lot of muscle. They've got a lot of muscle as far as monetary muscle that the common man does not have. The facts are the average person during the Great Depression or right before the Great Depression had more money in their bank account, when you relate it to how much they made on a yearly basis than people do right now. So people don't have that monetary muscle to be able to flex when this thing collapses and there are amazing deals. And that's truly what I've been trying to change on my channel, is to get people into that saving and investing mode and hold back on the fancy cars. We don't need to be going out to fancy dinners and things like that. Today's the day to hustle and to really make as much money as you can to invest it right, so that when this thing collapses, you're already hedged against inflation. Because I guarantee you, when this thing comes down, the first thing the Fed's going to do is pump the system with so much money, your head will spin. And I believe, and this is the economic ninjas whip it theory, the inflation whip it theory, or the dollar whip it theory, we're going to go from inflation to deflation to hyperinflation.
That seems to make really good sense. So it seems from everything you said about the banks, it looks like they're going to pull the rug from under the people, and it looks like they're just going to get all these properties and everything, just buy it up cheap to take over the entire system. So how do you think people can stop the banks from stealing all these resources for practically nothing? You think there's anything you can do?
So let me make this clear too. Banks are also susceptible to this credit crisis, okay? If all of a sudden the system implodes, banks didn't go up and buy up all the homes in 2009 after the '08 crisis. The reason why they didn't is because they all of a sudden got smacked down, not only by the government and the Federal Reserve, which are two different things, but also because they were scared. They're humans too, and they're afraid of making their next move too, unless they're guaranteed. So I don't think necessarily this is going to be the banks picking up a ton of homes for pennies on the dollar. And let me make this clear too. In 2019, the National Association of Realtors showed that in December of 2019, right after this whole thing started in China, we saw about 1.2 million homes for sale in that month. The facts are that's nothing compared to how many homes there are. So I don't think this is going to be just a bank sucking everything up. I think there's going to be amazing deals to be made. But the sad thing is I just believe there's very few Americans that are going to be in a position cash wise, liquidity wise, right? I don't care if that means you're holding cash in your bank or if you're going to go sell silver or sell cryptos to do it. There's very few people that are going to be in the position to buy these homes. But I do believe there's going to be plenty of homes to pick up at great prices during this next downturn in the markets.
Yeah, definitely. So, one thing I wanted to get into a little bit as well was it seems like the job market right now, a lot of people don't seem to be wanting to work. It seems like there's a pretty large quantity of jobs that people can get right now. So, a big question I had for you was, do you think this will last? What do you think the job market will look like by, say, the end of this year?
Well, I've been talking about that on my channel, and I've been telling people that I believe this is the greatest opportunity of your life. Literally, I'm not even joking. You literally have about 8 weeks until this opportunity ends, because we have that lag time between people that are getting paid on government assistance and they're not wanting to go back to work to the point where they're going to be forced back to work because this government assistance is going to end, and it will end. And for the people that are willing to go work right now, I'm telling people, go look for other jobs. Look, or if the job you're at, if you like it, look to promote up. Go and tell your supervisors that you're committed, that you want to take on more responsibility, that you want the raise before they hire somebody else. I've heard of crazy things like IBM completely demolished its college degree requirements. I mean, think about it. People now without college degrees that love tech and want to work in the business fields can literally go in and go, I want a job, and they'll go, let join and start hustling and humping and just crush it, right? There's never been a better opportunity. With that said, when people come back to work because they're forced to come back to work, a lot of them are going to be completely phased out of the job market. McDonald's is putting more robots in than Johnny Five and his, short circuit movie. You've got Amazon using artificial intelligence right now to fire its drivers if it does not deliver packages on time. You've got so many companies right now, CFOs working overtime right now to figure out how can we keep more people out of the building that we are paying rent in so we can get rid of it and keep them at home working. What I'm saying is jobs are going away. Literally before your eyes, you're watching more automated checkout machines at Home Depot, Walmart, the grocery stores. This is happening. The fact is, next year, there will be less available jobs than there were before this whole thing started. So I highly suggest people start really crushing it right now.
Yeah, so you were talking a little bit about robots and artificial intelligence. So it does sound true that a lot of these companies like Walmart and all these other ones are trying to phase out people and use robots instead, which is pretty scary for me anyway. So I wanted to get your take on this. So it seems like they're putting out these robots, everything, making them do the job, do the work. So how are people, everyday Americans going to feed themselves, get enough money for their family to, basically live? Um, what do you think of that? And how do you think we should try to stop this trend that's happening with robots taking basically over the entire job market? What do you think we can do?
So let's do this. Let's focus on the word scary. I love that you use that word because on my channel, I talk about my motto is be prepared, not scared. And the fact is, if you understand that something is changing in the world fundamentally, I don't care if it's economics, emotions, anything. If you understand something's changing and then you use wisdom, you use your knowledge to identify it, then you use wisdom to figure out how and where to position yourself to take advantage of it, there's no fear, right? Because if you have knowledge, you can't have fear because the knowledge will show you how to avoid it. So let's just focus on that because yes, AI is going to take away a lot of jobs and there's going to be some extremely hard times in our country. But what I want people to focus on is how to identify the solutions. And I don't think this is something you can fight, but what you can do is become more and more successful. Because I tell people that our country cannot be great without many people being wealthy. That is the fact. And I want the common man to become wealthy because I believe there is a compassion in most of our hearts to help others. And so if we can direct the wealth to the people with compassion, but it's going to take hard work, then everything is going to get better. But remember, the Renaissance phase did not come, the Renaissance era didn't come without the black, the dark ages, you know, so there always has to be very hard times before it can burst out to an amazing time in any society. Does that make sense?
Yeah, it does. So then the main thing for the viewers then is, how can the common man become wealthy when robots are taking over their jobs?
Perfect. So first off, you need to come to the realization, is your job susceptible to artificial intelligence or to job cuts? You just got to figure that out. I can't answer that for because there's so many different jobs out there. Secondly, you need to understand, most people, their time is so valuable. You know, people like, I need my downtime, I need my alone time. No, you don't. You need to realize where you're at, and you need to start working overtime and taking that overtime, whatever you're doing. If you're hustling, if you have overtime at your job, don't spend it on yourself, spend it on your future. Put it away, save it, pay off some debt, invest in alternative inflation hedges right now. And what will happen is, as you start to grow and get bigger and bigger, and your cash pile gets larger and larger, you go, well, I'm going to buy a piece of real estate and I'm going to rent it out. Now that cash flow means I don't have to work as much. And before you know it, you've got a bunch of properties, you got a bunch of assets, and you're like, I don't even need to work. And that's literally how it works. That's how wealthy people became wealthy. Very few of them had it handed down to them. The wealthiest, like Bill Gates and all these guys, you know, regardless of what you think of them, they made it in their lifetime, which means you can make it in your lifetime.
Yeah, I definitely agree with that. Uh, I guess, the main question though is like long term, we do see robots are taking over a lot of aspects of our life. Do you think basically all jobs are prone to being taken over by by AI? Do you think AI could do almost any human job, or like?
No, you can't. And the reason why is because that goes through a cycle as well. Artificial intelligence, first off, has to be programmed by a human being. And then what happens as it gets too big? I mean, shoot, we've all seen the crazy science fiction movies. They end up destroying themselves, because remember, everything's in a cycle. Everything, nothing is, there's nothing new under the sun. And every cycle has a beginning and an end. So trust me, there were civilizations way before us that had great technology too, and they thought it would be around forever, and now it's not. So no, there will always be service industry. That's another thing I always highly suggest right now is people need to learn a trade. I don't care if you want a career, you should also learn a trade. I have many trades that I can do. I can do woodworking, I can do consulting, I can do lots of things. Plus I have a full-time job. Plus I own 4 businesses. I'm constantly learning new things, because then I can bounce from one thing to the next. So if people are concerned, first off, start learning something that's valuable. Learn how to work with wood, learn how to work with your hands, become a welder. I know welders right now, they're making $200,000 a year with no college degree. But yet I got a person I know with a doctorate, and they make $60,000 a year, and they can barely get work. So you got to figure out what's more important: becoming wealthy by working hard and then learning what to do with that money, or going and getting a fancy degree that you're probably never going to use because it's in English.
Yeah, that's true. There's a lot of people who get college degrees and never seem to use them, unfortunately, or they decide to do another line of work. So that's definitely true. So, going back to a little bit what we were talking about, you're talking about the government getting rid of you're thinking that they're going to get rid of the stimulus and all that stuff. So when do you think they're going to do that? Do you think that's going to be sooner than later?
No, I don't. So what we're gonna do is it's gonna go in phases. Remember, you have to keep your people happy, the majority. So you always keep them just fed enough to where they don't realize they're starving. And so I believe you're gonna see definite stops to the additional benefits that came out from COVID. But excuse me, you're not gonna be getting rid of Section 8 or any of that kind of stuff anytime soon. I mean, you literally have a revolt. Politicians know that, and so that's just the fact of the matter. I do believe there'll just be enough shakeup to where it'll cause enough chaos to where the people will be begging for a solution. And so, no, I don't think. I just think the majority of the big stimulus is going to be gone. I honestly don't think we're going to see a forced stimulus check anytime soon. That's going to be jawboning on government officials' parts. If anyone is relying on that kind of stuff, you're in very serious trouble. Honestly, I will tell you that. You should look at that kind of stuff as a gift. And if you don't take that stuff and put it away towards, silver, gold, or Bitcoin, or food, or paying off a debt, and instead you're taking and spending it on something, but oh man, there's some bigger problems.
Yeah, so you talked a little bit about gold and silver. What do you think the direction of that is in the, with this deflation that may be coming?
It's definitely up, but people need to realize, put this into context of, if gold and silver go up, it means that the dollar is going down. So I don't think a lot of people want to see that in big places. The people that print money do not want to see that. So I do believe long term, especially with all this money printing, gold and silver look amazing. But it's not a get rich quick overnight thing. However, when it does move, it's going to move fast. I just couldn't tell you when, but it is just a fact. It's funny when people go, well, it hasn't done anything. And I go, well, we also haven't printed $1 trillion a month. So wake up to what's really going on. And once people realize that, they go, okay, I know where I'm going to put my money. But I also suggest not putting all of your eggs into one basket. Keep it diversified, because if you got a little bit in crypto and it explodes, you go, well, ho, I'll take a little bit of crypto off, buy some more gold and silver because it hasn't moved. And if gold and silver move, hey, crypto's not doing, arbitrage between those inflation hedges.
Yeah, it's definitely better to hold your wealth in, gold and silver than paper. I definitely agree with that. So, a major question I have for you, what would you do to fix the United States economy?
Honestly, we need truth and transparency, and that's just not here. We see it on all these different platforms. It's very hard to tell the truth without getting stopped. If we had truth and transparency, that would be awesome. And it's just sort of off topic, but not. The only reason my channel has grown so fast is because I decided to do something totally different, and that was just be raw and honest and real, and even down to not editing my videos. And there's nothing wrong with people editing videos, but the facts are, I can barely spell, I can barely write, I mispronounce words all the time. But the facts are, a lot of people have issues, and that's being truthful, and that's what's making a difference with so many people on the channel, and I love that. So really, what it comes down to is fixing the economy has to deal with truth. So what's more truthful than Bitcoin, gold, and silver? Once you start really learning about it and realizing, oh, you can't really fake it, the real thing, well then that's the truth and transparency. And that's why you're going to see a commodities bull run like you've never seen before, including cryptos.
Yeah, I think we are going to be seeing something big going on because this Wells Fargo thing was pretty big. Like it's about one of the biggest things we've seen, and recent times right now, biggest news. So I definitely agree with you. There's some hard times coming ahead. So I wanted to, could you tell the viewers a little bit about your channel? I'm going to share it on the screen so people can see it.
Oh, nice. Thanks. Yeah. So it's called the Economic Ninja. Um, I started it, I think a year ago, but I didn't really make any videos until September. And it was in October, I decided to really start moving forward with it. And it's taken off real fast. I've been really blessed. I tell people I have the best subscribers on YouTube because these are people that are hardworking, that understand something's wrong, and that they want answers on how to fix it. So I try and break things down in the most simplest forms. And man, honestly, coming onto a show like yours, honestly, is a real blessing. It's a real honor because I watch you just crushing it at 17, and I'm like, man, if I would have been where you are, oh man, this, you know what I mean? I love getting to know people like yourself, so this has been a real pleasure for me.
Oh, well, thank you for being on the show. And if anybody who's watching this video, if you could please subscribe to the Economic Ninja. He has a really good show. He's really speaking the truth on a lot of these economic issues. And yeah, I hope we can have you on the show again soon. I think this was really good, this video.
Absolutely. Thank you so much.
Well, thank you. And thank you to the viewer who was watching. And please subscribe to the channel and share this video with your friends. God bless.
God bless.